why you should be your own financial advisor. If you take what you know about money, add the internet, what do you know in total? Should be everything, right? No. The paradox in the world today is that there is more information than ever, and we are at the beginning of the information age. Everything we turn to is about information, continuously being fed by a never-ending production of reproduced and repackaged information for you to spend money. It's all about data, every transaction, every second that you're not transacting but searching. It's about your behavior. The world today is designed to know you, who you are, what you believe in or not, what you do or don't, what you like or dislike, where you go, for what reason, what you search for, when and why, and it's all collected to build a picture of you as a target customer. Data can be used to understand what you would likely do next, want next, go next, what you're likely to think about next year. And if that's known, you will be guided, motivated, or inspired to spend your money because it's all worth your money and your future money. Think about that. It's amazing that you can do all your shopping online, delivered to your door. You could even buy a car and get it delivered to your door today. Look at financial services as an industry. Till this day, the retirement narrative that says 6% of people retire financially stable in 2020. That stat was the same when I joined the industry 7 years ago in 2014. It was the same 10 years before then when financial services still offered a book to sign to open up a bank account. Today, you can open up a bank account with a digital fingerprint and apps to transact and budget and understand your own data. Yet, 6% of people are still going to be the lucky ones that retire financially stable as the years go on. And there's no real data on how many of those people are retiring stable from inheritance, from business. Have you thought about that? So the question is, if financial services truly existed to solve the problem of financial freedom, why hasn't the 6% of financially free people not proportionately grown since? Not even to 10% since, or just 1% more? Why are personal finance lessons sponsored in universities, yet that number hasn't increased? Why do we still believe buying a financial product is the answer to our financial freedom? Now, before you jump to a judgmental, angry conclusion, I'll give you the answer. I entered this industry as a financial advisor with the inspiration of helping people to include themselves in that 6%. But how was I going to do that? Well, I learned how to break down a target customer who will be willing to buy into the insecurity of not being financially stable at retirement. I learned what product to sell them so they can invest their money, and I learned how to work out the shortfall so I can keep them on track to spending more money through financial products. The problem is, I wasn't taught to understand human behavior. I wasn't taught how to become financially free myself as an advisor. I wasn't taught how to grow wealth. I was taught how to sell a product, and I only got paid on the product I sold and not on the success of the person who is doing what they should be doing consistently to reach their goal. I chose to learn and seek the answers to live financially free, to make time and learn from people who've done it in different ways, to learn about behavior and self-mastery. I became what I believe was a real financial advisor, someone who you can turn to for advice around everything money and not just insurance products and retirement annuities. I learned through practice and became a teacher and mentor to clients and started a free financial advice channel with no bullshit, just step-by-step how-tos and a mission to empower everyone to understand this and live on their own terms. So this is me in the world. And on the other hand, financial advice is still widely presented as the process of assessing shortfalls and presenting graphs for you to buy a clever solution. With most financial advisors out there still get paid as agents of insurance and investment companies, even if they're independent, pushing products with benefits that suit your lifestyle, oblivious from really understanding what financial advice should be. This is the reality, and most advisors genuinely believe that what they are taught is noble and the right thing for you, because if you die without a policy, someone loses out, right? So that's financial advisors. Let's look at investment companies. Asset managers exist to sell their investment products, and their products are ranked as best performing fund of the year, not because they have the secret recipe to give you your financial freedom. No. They're ranked because it's a great marketing title in the spirit of competition in an industry that is competing to sell you their fund. Banks exist as middlemen to sell you money, a loan at prime interest rate, and they get that money from the Reserve Bank at a lower price, which is called the repo rate, as well as to provide you the service of managing your transactions of money in your life and out of it, just as restaurants are the middlemen in the food business. So that being said, considering data that is shaping your behavior in the world today, the narratives that are out there designed to get you to spend money, even if it's on your more important financial goals, this is why you should want to be your own financial advisor, so that you can understand what financial freedom takes in action in relation to your life, so you can start making better decisions for yourself, so that you can seek the right guidance in your journey and become less susceptible to the narratives that are constantly being fed to you. Your journey to living your life on your own terms starts with realizing that the odds are stacked against you, that money does make the world go round, and that you can control the outcome of this game if you focus, stay disciplined, and follow some basic rules. Because winning the money game is not that complicated.